And a very good morning to everybody. Thanks for joining me here today on the Triggercharts pre-market rundown for Friday, April 17th, 2020. And my goodness, have we had a lot going on in the last week since we last met. I mean, an incredible amount of information is coming out on a daily basis about, the regular things we've been seeing and normal things or abnormal things. For example, the count of mortality and morbidity of the COVID virus, as well as the flattening of the curve, the plans to reopen the economy. And overnight, we saw an extraordinary amount of exuberance over the fact that Gilead has a new drug or an old drug that's being utilized to try to treat some of the COVID-19 symptoms. It is a treatment. And there was some good findings in one specific hospital, one group. There was not a double-blind study. It was not an official study. And they found that a good number of the people that were in that study that were sick and hospitalized with the virus actually got better quicker. However, 2 did die, so we're still on the same general 2%, because I think it was a total of 100 people that was involved. But if there is any hope for something other than the absolute magic potion, which would be, of course, a vaccine and eradication of this, up next is, of course, a treatment plan. So before we get any further, let's mention that this is a discussion for educational purposes only. It is not a recommendation to buy or sell any security. Investing involves substantial risk, and past performance is absolutely no indication of future results. And remember something, that investing, you could lose money. Even if you set it up right and you think you're in the right place, you can lose money. For example, let's take a look at what's going on right now with crude oil. Crude oil, look at that, $24.90. You see that on the top? Let me kind of give you the spotlight so you can follow me here. Right about here, see that, $24.90. Wait a second. Didn't it close like under 20 yesterday? Wow. But wait, it's showing a negative 2.35%. What is going on? Well, it seems that we get contract rolls, and when the contract last rolled into the June contract for this current period, well, it looks like it was a higher value in the front. And now what happens is that there is some money loss on that exchange. So, these are the kind of things that even if you have the right direction, you have the right position, sometimes things go a little weird. Sometimes they go a little cockeyed, so to speak. I'll mention to everybody before we begin that if you do want to check out any of the indicators we're talking about today, I put a link in the chat. And what you can do is go over to either Triggercharts.com or the trading app store on TradeStation to check this all out. And of course, anybody that does subscribe to the Triggercharts Commander Series, new subscribers will get a 4-hour training program, which will give you the opportunity to understand a lot more in an in-depth analysis at your leisure. It's 3 parts. It's long, but it gives you a lot of substance. It's valued at about $199. That's what we usually sell it for, but you'll get it complimentary just for a subscription. So if you do have a subscription, a brand new subscription to the Commander Series, write us at info@triggercharts.com and we will get you all set up. Last thing I'll mention is that, we just got some really good information from Kevin. The July contract for crude is trading at $29.71, August at $31.32. So you can see how the current month or front month compared to the forwards are trading at a very big discount to where they are. And that is a problem if you're trying to roll these things because you could get caught in that transition. So just be careful with futures, of course, and be careful with understanding what you're investing and how you're investing. But what I want to mention was, if you have any questions, you can put it into the chat. If you have any symbols, we'll go through a lot today. We're going to go very quickly today. There's a lot on the table. All right. I think I got through all of the basics. So let's talk about what's going on. We have, over the last week, had what we are calling the survival of the fittest trade. What does that mean? Well, what companies have balance sheets that are solid and not a lot of debt that's being a problem, that has secure dividend for the most part, and those companies have been gobbled up. We also have the COVID trade, we're calling it, which is all about the idea that there are some stocks that really fit the parameters. For example, an Amazon, a Netflix, right? Those two are I think, poster childs for companies that will do well in a lockdown. And what we are starting to also see is an unraveling or unwinding of that particular trade. And we'll go through some of those. You'll see that today Amazon is down. You'll see that Zoom Media is down. I think Netflix may be down. We'll look at Roku also and see what's happening. But aside from all that, we have what is being billed as possibly a game changer. Remember, markets and people are thirsty right now for any information that looks good. There's a lot of short positioning in the markets. There's a lot of cash on the sidelines. And what we're seeing right now is this incredible move up, 2.9% on the futures for the Dow. And then we have the S&P futures up 2.49% of 69. The NASDAQ up 159. All right, so there's also a reopen plan that was spec'd out last night by the coronavirus task force, which talks about a gradual return to quote unquote normalcy, which even if we get to this phase 3, it doesn't look as normal as you would think. I mean, face masks, gloves are going to be a thing. And that's really important to remember. We're not getting back to just the lollygag days of just sharing ice cream cones with people or being very flippant about our health. Everybody's going to be washing and washing correctly, at least they should be. But right now there is a plan to reopen, and that's good because at least there's something there. 3 phases, check it out. There's a 14-day sloping of mortality, morbidity needs to come down. Then you get to phase 2. Phase 1 is just still mitigation, but not as harsh. Phase 2, you can open up bars and I guess some restaurants. And then what we have from there is possibly the road to getting back to going to sporting events and being in theaters that are reasonable. Markets retracing, of course, we talked about this last time, 50% of the loss on the right-hand side of the screen. You'll see right here, there is a Fibonacci retracement that we went from the top to the bottom, and right about here is the 50% that we knocked right at or above, and then below yesterday, the last couple of days. It looks like we're going to open up somewhere in the pre-market. Where are we now? 285.40. So where is that? 285.40 is right about there, which is the peak that we saw this week and then the reversal down. Now, what's interesting is you got a few things going on here. First of all, we have a kind of an open air pocket zone right now. Again, this is a lot of short covering going on in pre-markets. We'll see how the day really plays out. But right now what we're seeing is that there is some exuberance going into the weekend, and there is the opportunity for us to get right through that 50% retracement of the S&P 500. And then this again on a weekly basis. And then 292 is the ultimate top side limit that we're seeing here. But I think that you are going to see some resistance right about the 289 plus area for the SPY. And that's about 4 points above where we are right now. Earnings week started out slow, then picked up steam this week. We got the financials that came in that looked, well, horrible. The big issue is that massive set-asides for bad loan provisions are happening. And that means that banks are believing that mortgages and credit cards and auto loans and just unsecured loans are going to become a significant problem for them as we see the unemployment rate move higher and people just are unable to pay their loans. So there's a set-aside. We saw a couple in the $6 billion, $4 billion, $5 billion. So I think we have like $25 billion or maybe even a little bit more right now set aside in the first go-round of what banks are setting aside. It all depends on how long I would say the situation goes on with the lockdown, the unemployment, and all that. Stimulus package, the PPP officially ran out of money yesterday, I think it was, or maybe it was Wednesday night. So what's really kind of unfortunate is that if small businesses were a little bit late or had difficulty getting their applications in for whatever reason, couldn't find a bank, or banks were slow with the applications, that right now there is no money to fund any further if it already has not been submitted to the SBA, and I'm not even sure what you'll get if you haven't gotten money already. We're hearing some really weird stories about companies, and I have to flush this out, so don't take this as gospel right now, but I'll give you an example. A company like FedEx that maybe has each of their individual FedEx Kinko's stores owned separately as a company, applying for aid for each individual store because now they're under 500 employees. So I'm not quite sure how that is, if there's really any truth to that, but I would really suggest you look hard at that, and the government thinks about that in terms of helping out the rest of the people. There's $250 billion on the table being requested by the Republicans and the administration, and the Democrats have some issue. They want to add more money. They want minority-owned businesses. I'm not going to go through all that with you. Bottom line is, I think eventually we'll get more money out of the government for the PPP program. I didn't think they expected to run out so quickly. They're saying it's a really popular program. Of course it's popular because it's free money with no strings attached and no personal guarantees from what I can see. Economics look horrible. The unemployment rate currently about 14 to 17%. Regional manufacturing, terrible, lowest ever. We saw the Philly Fed come out, really just horrible. Empire State was just abysmal. So we knew that was going to happen, and we're going to see some further bad economic data to come. A lot of people are scratching their head, and you're probably doing the same thing. Like, what in the world are the markets doing going up 2% when we have 5.5 million people on the initial claims this week? Unemployment somewhere in the neighborhood of, again, 14%. And on top of that, all these other bad economic and earnings numbers that are going to be coming out. I think there's a major disconnect with markets. That's where technical analysis comes in really handy. That's why when you really can't understand, and this doesn't happen very often, this is a unique situation that you're probably not going to see in your lifetime or my lifetime, which is company after company pulling their guidance, not able to understand what the earnings outlook is going to be, and therefore there is no fundamental analysis that you can put into place to properly value a company. And therefore, stock prices are this giant unknown. And that's what's happening right now. Price discovery is trying to go on, but really held up by the Fed and held up by stimulus right now. If it wasn't for that, this whole chart would not look at all like it looks right now. So we do see technically some broken patterns that have to redevelop. You have to go out longer on your charts. And then on top of that, you see a disconnect psychologically with the idea that, hey, things are really bad, but I'm going to buy anyway. Couple of things to note: that New York is locked down. They're extending their lockdown to May 15th at least. The infection rate in Italy is rising. We're seeing flattening of the curve, slow and steady. And we also saw one of the reasons, and you do ask, well, why are junk bonds doing so well? Why are the munis popping back up? Well, the Fed has been implicitly guaranteeing backstopping of things like money markets, junk bonds, munis. They're even buying junk bond ETFs directly. This is a first. The Fed is outright buying ETFs in the open market in the we'll call it the sub-investment grade level. Very interesting. You have to wonder how much more they're going to creep into the markets and if we're going to turn into Japan, which would be a horrible thing, in my opinion, for price discovery and for people to really understand what's happening with regard to their investments, how they could really price things, etc. Pretty crazy. So last thing I want to mention here is next week coming up is retail sales, initial claims, and durable goods. All right, if you have any questions, if you have any stocks, put it into the chat. We'll get right to that. And I want to bring up a couple of things. You see that Amazon is in the red here, like we talked about. Some of the COVID trade companies are coming off a little bit. Roku is down. Netflix is down. So that's kind of important. Let's take a look at Zoom for a second, just make sure that I'm correct here. Yep, Zoom is down also. So you're looking at this situation. I wonder if Work is down, Slack. Yep, that's down also. These are the companies that were supposedly the COVID plays. Now you look on the other side of this, and you look at some other companies that are the back to normal trades, and you got like Hertz, for example. We'll go through all these charts in 1 second. I want to answer a question from Greg. He says, they are saying everything is priced in. Also, market is looking to 2021. Well, yeah, because there's nothing to look at right now, Gene. I agree with you. I totally agree with you. You know, if we can't look at things now, why not just look forward? But you know what? The earnings picture is not much better. We're reviewing the earnings outlook consensus compared to Yardini's numbers yesterday. And the fact is that if you look at this year, we're trading at about 22 times at least if we get earnings in about the 130 range. Next year, we're talking about 150. Analysts have us all the way back up to the top again. I don't see how that's possible. Let's take a look at Amazon. Wow, what a chart! Look at this chart. This is just unbelievable. We're gonna stick on the dailies today because I just, again, for educational purposes only. What you're looking at right now, let me just tell you what the screen you're looking at is the standard Commander series through Triggercharts with the addition, if you look down the bottom here, of the aileron. The aileron is a momentum indicator that combines 15, 12, depending on what's happening, what stock it is, and what history it has, etc. But let's call it a dozen or more. Different indicators, graded, scored, ranked, then put back into the system to give you a total look at what's happening. So if you like stochastics, if you like MACD, those kind of things are in there, but it combines them, ranks them, rates them, scores them, and comes back out with a new indicator that provides you this kind of momentum and trending oscillator type of positioning. So, but what you're looking at right now is the top here, the radar screen. The radar screen on Amazon, we saw, you know, a weekly long alert on Amazon, long for 8 days, long for, what do we have listed? 240 and 60. So let me just kind of take a look at that. On the top, you can see the 30-minute, the 60-minute, 240 daily, right here, daily, and the weekly. So Amazon is obviously in a long situation. It's been long for the last, let's see what that is. It says Amazon long for 8 days. 1, 2, 3, 4, 5, 6, 7, 8. Got a long call at 1964 here. Very easy to see. Once you got over that hump right there, 2091. See that? See this little hump right here? That was the only resistance you had. If you look at just the altimeters and you kind of really focus in on that, which is what you want to do, looking from right to left, always looking right to left, right to left. Same thing up here, looking from right to left. Let's see where we are. Well, again, I always talk about this, and I think it's really good. Just go into TradeStation, grab your box tool, and then what you could do is simply just draw blocks right here, you know, anywhere here if you want. I mean, you're in no man's land here, right? Above that level was really important and really key. Once you got over that, it was a screaming buy. Now, we started looking at this all the way down here because we did break above, and you did see there was some congestion right there as we looked from right to left. And let's shrink this box up a little bit and kind of go there. Look, that's where your congestion was. Then once you breached that point, hey, it was clear sailing going forward. So Amazon has been a big beneficiary of this trade. Valuation is a little bit out of control. Did drop down. We saw the momentum change dramatically. Still seeing good momentum. Again, the stock's only down 1.5% after a massive run from just under 2,000 to 2,500. Roku also saw a really nice run. We called this is a really cool chart because, you know, what you have here, remember, a lot of these technical areas are problematic because we're not breaking above new highs. So you got to look in the pockets below areas. So if I take this line, I draw it right about here. Well, look at that. Look at, I didn't even look to the right when I did this. If you look from right to left and then you go find those consecutive, and what I'm looking at here is these. Look at the green lines underneath this, right? So if you look at the consecutive levels, in fact, if you turned off all of the plotting and just used the altimeters, you could pretty much blindly understand where you are. We got right to the top of this yesterday, and then it stalled. It pulled back. It's now down 4%. So where do we go from here? Well, the potential to drop down to a level about 115 is very likely because that's where the breakout occurred on that second level. Here's our first level breakout. We called it about 79. It dipped right back to support. Look at that, how great that was. It held and then moved right back up. So if you get below that, though, you really have not a lot of great support down back to the, I guess we call that about 105 level or so. So there's your risk factor and your breakout. The next level is going to be very difficult for this stock. The reason is you got to get through this massive congestion. And again, we'll just take our box tool and we'll take a look here and we'll just draw this congestion line. You got to breach through this. It's big. It goes way left too. Right? We just connect our lines in a box. And what you have there is a level you need to get through. So you need to get through probably about the call it 142 level before you can see another breakout to the upside. Netflix, another one that's been a big beneficiary, again, called out a great breakout at 371, trading at 449. The problem right now is with these breakouts and with the fact, if you look at this very carefully, you'll notice something. First, here's the general sizing of some of these altimeter ranges. Kind of move it up here. It's a little bit smaller. Move it up here, about the same range, right? This one up top here to the right. Look at this one. Look at the range you have. You have to draw it all the way down here. You're talking a range from 298 to 371. That is substantial. That range of 298 to 371 is a problem. Yeah, you do have good support at about 350, 355. Below that is no man's land. Now, is it going to get there? I don't know. If it does reverse down hard, I would think that I would say 352, 353 is some support. Below that, you have one more nub at 339, because you can see there's a lot of activity right along that line. From there, it's a problem. The SPY we talked about before, this is really interesting. This is on a daily basis. What I find really interesting is that there was no altimeters drawn until just 2 days ago. Now, if we open up today where we are right now, it's at 285. Let's draw a quick line in here. Again, use your tools whenever you can from TradeStation. Just plop it right there. Let me double click this. What you could do is change your color. Let's just change it to a kind of a red color. And let's also look at the labels, and let's put it on bold and put it on 11 so we can see it. So there's 289.52. What did I say? 285. Let's kind of bring it down to 285 and change right there. So a little bit above the line. We're kind of right on. If we look at that, we're right on the high from a couple of days ago where we reversed down, and we're right back up there. So if we open up right at this layer right here, right at this level that we're talking about, right about here, the opportunity to move higher is significant. However, I do think that there's probably going to be a significant amount of resistance. Now, again, there's a lot of exuberance inside of the market right now due to the fact of this drug. So let's take a look at where we are. Again, this big retracement from the level, but you do have some resistance here. Now, if we kind of move it outward as well, and I want to change this to weekly for a second on this, because if you really kind of look at the analysis, that was the line we drew a second ago, right? On a weekly basis, though, above 287, 288 is going to be really hard. Look at all that hardcore resistance that's playing out right here. Very significant overall. And already we're seeing that the ES is falling. It was up 3.3%. It's down 1% already, which isn't, awful. But the NASDAQ's only up 1.2. Of course, an outperformer recently. NASDAQ only down 7% for the year right now. Question quickly, Greg, do I use moving averages? I do. I don't like them. They're random. These are moving averages, but of price and volume. These are so much better. These altimeters, when you're looking at here, so much better. I get, really hardcore numbers that I know are areas like right inside of here. See this area, this hole, that big jump or the drop that we saw? Those are really very well identifiable. And the problem is when you start to use things like moving averages, they're a bit just random. I use them for a tool to understand where institutions are thinking. The 50, 100, maybe the 150 and the 200-day moving average are what the average analyst at an institution uses, because they're lazy. Let's be honest. They're really lazy. But I know they use that. If it gets to 50, maybe it's going to be support or resistance. Let's work from there. Then let's look at the 100. Let's look at the 200. That's a big issue. So I would consider the fact that there is the potential to use that, but these are just so much better. There's so much more information that is embedded in each and every data point on this. And as I mentioned before, I'm going to put this up here again, really encourage you to check out a trial. It's a free trial on TradeStation. So go over and check that out. I put that in the chat. Go through a couple more stocks here. Well, maybe not. Let's clear my drawings. Microsoft, also a big winner here. It's all about seats with Microsoft. It's all about their Azure and their cloud. It's all about Teams. It's all about Skype. It's all about Office. And yes, they are a major beneficiary of the work from home. If you look at this, and this is weekly, but let's kind of bring this back to a daily for a second here. And let's take a look. Well, we did hit resistance yesterday, looking to open about 179, slightly above. There is some resistance at about 180 and change. I don't think we're going to break above this right now in this environment, unless a miracle happens. Facebook has been lagging a bit. We do have some resistance on Facebook at about 180. We'll call it 181. I really would look at this range on Facebook because when you look at the chart, there's nothing to the left really to speak of. We did see some really interesting information from Barry Diller yesterday talking about at Expedia, they did about $5 billion worth of overall spending on ads in the past on an annual basis. They're going to be less than $1 billion. Just think about that when you think about Facebook and all the other things that are going on with Facebook, Instagram, with their entire package of security issues. Yes, stay at home. There's a kind of a sharing thing that's very good and beneficial with Facebook during that. But I would really be concerned about the ad spending in the business market, what's going on. Jack in the Box, look at that. The big waterfall down. Then you had just absolute open space. Look at this great, I just love this. This kind of not a banger, but a modified banger, I'll call it, where you got to the bottom here. You saw the aileron start to move up below zero. Not really great, though. Kind of still in the zero range, but it was green. Then you got a support level that kind of held on a couple of days. You got above. But look how beautiful this was. Really focus in on this. We came right into the area. When you look at, I'll put some marks here. You got a long call right there, a bias to the upside. We got a little bit of a breakdown, but it held really nice. Look at it, held. And then when the market started turning a little bit, just jammed up really nicely. So you got a call at about $31 and it's currently $50. That's about, what is that? That's a 40% return right now on that. That's pretty substantial. So let's clear that. Go back here. Go back. A couple more. Put yours in real quick. Love. I just thought I'd put it up here. Love Shack. Not Love Shack. Love Sack. Love Sack is a company that makes like bean bags and chairs and things of that nature. I just thought it was really interesting. Let's go really quickly. There's a couple in here. Myrna. So Myrna has a new stock. Obviously, not a new stock, a new potential. This is another poster child for the COVID trade, the biotechs, the companies that are in the running for looking at the opportunity for a treatment or a vaccine to eradicate the COVID. Well, they received, I think, close to $500 million today was the announcement on utilizing a government and a grant as well as some private funds on distribution. It's going to open up about 21% higher at 49. I think this is, I'll go back a little bit. I think this is an all-time high. Yeah, it's an all-time high. So, I mean, there's not much to say here. We called a beautiful opportunity a couple of times. There's a lot of consolidation for a while. Called it at about right there, 32.49. Really look at how it held so beautifully. This is really strong. And then we just broke out. So you got from 39, got traded 48, $18, about another 40% there. One more, and then we're going to do this. I just put this on here. I don't know why. This looks terrible. That's why. MMA. What is MMA? I don't know. That symbol doesn't seem to work. Michael, that doesn't work. Microsoft, we talked about. You have the upside opportunity. I don't know. I think you're going to stall out somewhere around here, though, to be honest with you. Let me see if there's any other lists here. I got that one, got that one, I got that one. Hertz, big range. Got to be careful there. Same thing with like the cruise lines. Coming above this is going to be very hard. There's a lot of resistance right now. Norwegian is trading at 12.29. You're right at that line. What are we talking about? Right here, 12.07. So if you can stay above that, there's an opportunity. But truth be told, I think there is some kind of resistance on these. But if everybody's getting a happy pappy about the opportunity to, in fact, get back to work and get back to what's going on, I think there's some opportunity. Well, the market is open. Let's see what happens today. You know, the potential for reversals into the weekend, but yet the optimism about the actual treatment that's out from Gilead. I think it's going to be a pretty good push and pull, tug me war today. It should be very interesting to watch. Thanks again. Tell your friends, and I'll see you again next week.